Quick update on Sofi here on the 20th. So we filled the gap at 858. I had that marked as a spot that be a potential good buy zone, and so I did buy some shares here at 858. And I know in the last video I talked about going to 6, so it doesn't make that much sense, but I do think there's a very good chance we bounce up here and fill the gap still at 930, potentially go to 955. If you look at the structure of this move, we have W here, X. Just look at the length of this, and if this was the Y wave, it'd be very short. It's still possible, but again, also the 1.61 fib, which is very important, is at 950. Let's go to the log chart. It's actually at 955 on the log chart. So 955, and then also this also goes to 955. So I have a suspicion that we are looking at one more move higher. It's going to take obviously a bullish reaction to FOMC, but if we get that, it's going to look just like this. And it'll probably be pretty quick. It'll be in the next week we get up here, maybe even the next couple of days. And then that should complete the overall B wave. And then from there, we can make our way down to the target of around probably $6. Because again, if this is a second wave, it's got to retrace to at least the 0.5 fib here at 705, but likely down here to this gap fill at 604. And then it's ready for a third wave. So that is my thoughts going into FOMC. I think this has a good chance of bouncing up here and filling the gap. If you look at standard deviations too, it makes a lot of sense for us to go up here a little bit farther and then drop. We finished above the 20-day moving average today on the daily, so that's good for a bounce. We finished like right at it, I guess. The 50 is around $9. So we finished like basically right at 862, and then the 50 is up here at 901. So we would temporarily get above the 50-day moving average. I don't think it would be enough for the 20 to cross the 50 though. It would probably just come up here and then curl around. So that is what I think going forward. As far as timing goes, let's say we finish this up on Friday. We started this about 2 months ago, so I'd be looking for about a month down. So maybe sometime in early November, maybe stretch all the way out to mid-November, we'd bottom around $6. And it doesn't have to go to $6, but again, that's just the way that it looks because we got an impulse move down, corrective move up. We need at least one more impulse move down. So if we get a move to 950, 930, around that area, just be ready to hedge your position with some puts, covered calls, whatever. If I'm wrong, let's say I'm wrong and it goes down from here. Let's say it turns into a 5-wave move. 1.61 fib is at 852. You're probably looking at something down here around 828 based on the first wave. And in that case, you're still going to get a bounce to 870 minimum, unless we get an extension. But that would mean that we finished the B wave right here. So we did not fill the gap, and we finished it right here. That's possible too. I think it's more likely we go up here and hit 950, but it's possible that this is the very top. So be ready for it to start falling if we get a bearish reaction to FOMC. So those are the scenarios. Pretty quick video. Again, this is a second wave in my opinion. It could be a B wave as well, but more than likely a second wave. So look for more downside over the next couple of months after a potential bounce over the next couple of days. So good luck trading over the next couple of days. I'll put out another update here soon. Hopefully we get this bounce up here to 950. All right, good luck rest of the week.